and welcome to today's more important analysis videos on Wednesday 14th of February with me, Richard Perry, market analyst at Hantec Markets. We've got inflation. US inflation is the big focus for today. Ever since that payrolls report contained the average hourly earnings growth that shot higher to 2.9%, the markets have been fearful that inflation is on the way back and could be rising, and to an extent that it drives central banks to hike rates quicker than the market had previously thought. Inflation today for the US CPI is going to be key to this. Is this inflation's going to start to come through into the hard data? It is certainly a factor that is sort of helping to settle markets initially. We've got treasury yields which are basically sort of flat to an extent. On the 2-year and the 10-year, this is the market data board. Dollar's slightly weaker, nothing too significant, although sterling is an underperformer. And you can see that the dollar just started to drop back again yesterday, and has again continued that to an extent today. But I think this inflation data is going to be massively key for the outlook of the dollar going forward, and certainly how the markets view risk at the moment, because obviously what we have seen is the yen significantly strengthening, and that has been a real factor in recent days. And the yen that has dropped this morning below 107.30, that was a key low that dates it, means that this morning the dollar yen rate went to a level not seen since November 2016. It's slightly rebounded a bit as the markets have settled, but yeah, this remains under pressure for this move. So yeah, we have seen markets settling stable in terms of sentiment, but I think that sentiment could be shifted if we get higher than expected print on inflation. We've seen Wall Street, which is slightly sort of settled a bit yesterday, nothing too significant in terms of the direction, but certainly considering the wild swings we've had in the last sort of couple of weeks, it has settled down to an extent. European markets basically feeding off the positivity of that, all around about 0.75% higher on the FTSE, DAX and CAC. Now in terms of data points today, we've got the Eurozone GDP numbers out this morning, expected to show a mild improvement to 2.7% on the year-on-year data. Q-on-Q expected to be at 0.6%. But the big focus is this afternoon on the US inflation data. Now, US inflation is expected to tick actually lower on the headline to what and the core. Headline down to 1.9% from 2.1, and the core down to 1.7% from 1.8. But if either of those numbers sort of remain at levels of last month, or actually have a positive surprise, then I think we could see some dollar strengthening and also yen strengthening as well. Yen being the fact that the markets would take that as a concern, and subsequently would likely to see the yen as a flight to safety outperforming. You've also got retail sales this afternoon, 0.4% on the ex-autos retail sales there. Also crude stocks. Watch out for crude stocks. Are we going to see another inventory build in crude? Meant to be 3 million barrels. Distillates minus 1.5, and gasoline at plus 1.25. So yeah, that's the main focus today is inflation, but still, I think oil will be flying around on those inventory numbers. Now, let's do my chart today, which is Euro Yen, which has, interestingly, sorry, that's the hourly, has been in this sort of shallow uptrend in the last sort of 5-6 months. But that shallow uptrend broke last week, and it's been continuing to sort of maintain that breakdown. But you look at these momentum indicators, that RSI continually sort of bouncing from around about that 40 level throughout that uptrend. The market has now sort of started to move below 40, and this looks like it's a deteriorating chart now, doesn't it? It looks like the pressure is going to be growing to the downside. You saw negative candle yesterday, seemingly a negative candle today. That breakdown below 33 figure, which was that January support, is now sort of seemingly going to be confirmed possibly today on a closing basis. You've also got the reaction of the support 31.95 if that gets broken, and then 31.15 is the key sort of November low. If that gets broken, then the market is really starting to go into reverse, I think. And you look at these MACD lines, look at those MACD lines falling decisively below neutral today. Looks like the bear forces are growing on this one. A very slight sort of downtrend has been breached, as the selling pressure has not sort of been maintained in the degree that it had been previously, but still I think this is still posting lower highs, lower lows. You've got the momentum in the negative configuration on the hourly, failing at 60 on the RSI, failing around neutral on the MACD. So yeah, rallies are being sold into. You've got this old resistance around 33 figure up towards yesterday's high around 33.30 area. So basis of resistance there, and I think yeah, rallies are being sold into. So just bear in mind that as the market has sort of bounced a little bit as the Europeans have come in and taken over trading, but still I think the pressure remains near term to the downside, and a test of that 31.15 support could well be seen. So I wish you good luck in trading today, and I'll speak to you later.